Hello, Matt Noltemeyer with the Sosland Publishing Company Markets team. I'm talking with Steve Freed, who's just completed his presentation in the general session of the 40th Annual Sosland Purchasing Seminar. Steve, thanks for being here. I wanted to ask you if you could just summarize a little bit about your presentation. You went deep into what we might expect for corn, wheat, soybeans in both domestic and global. But can you just summarize for viewers a little bit of what we're looking at this year?
As a buyer of wheat, I think there's three things that they have to be watching in the next 30 or 45 days. Obviously, number one is weather. And when we look at the forecast, it's going to be a normal summer. And so that means lower prices. Secondly, will be demand. I think the U.S. is taking a back seat as far as potential corn, soybean, and wheat export demand, whether it's corn out of South America, whether it's beans out of South America, or whether it's wheat out of the Black Sea. The Russian has been absent of the world trade market because they just don't know what kind of crop they're at. But this past week, they decided to get back in the game, and they're trying to figure out what is the floor price that they want to trade wheat for export, and what are the taxes that are going to be included. So I think that without a weather problem, prices will go lower. And number three is just the outside noise, whether it's tariffs, whether it's the economy, the Fed lowering rates or not lowering rates. And all those things has an impact on money flow. And so the one person last week said the wheat market is like a game of chicken, in that the farmer is unsold and the consumer is unbought, especially in the world. They're kind of going hand to mouth, given the fact that wheat futures are in carries. And the managed funds are record short the U.S. markets and the Matif wheat futures. And they love carry markets, where they can roll their short position up to a deferred contract that's higher and watch it come down, and they make the difference. So there's nothing in the market right now to make these funds cover their shorts.
Thanks, Steve. Excellent summary of a presentation that included a lot of deep dive type of detail. One thing that caught my eye during your presentation was you had a slide about flour price direction, and you talked about consumer demand and some of the unknowns and uncertainty. Could you just expand on flour and flour prices a little bit?
Well, I think flour prices have come down, partially because we just don't know what the demand is going to be, but we do know we're going to have a good crop, especially in the hard red runner wheat. Soft wheat crop might be big, but we have to wonder about some of the quality issues. And the protein level of the Kansas crop might be at the lower end of some of the historical numbers. And the spring wheat is a big unknown with acres down, but conditions are improving up there, despite the fact we were surprised that the USDA gave such a low rating. I think that on one hand, the buyer doesn't really have to worry at this point about futures prices or flour prices. They're probably going to go lower. What he has to worry about is the demand for his end product. The consumer is buying less with lower disposable income. There's threat of a recession going on, and the consumer is worried about his job. So far, jobs have been doing well, but the last couple of reports showed a decline in hiring. And so that's something that the market has to be concerned about. Plus, when you go to a supermarket, every time you go, it's a higher price for the same goods that you normally buy. And I think the consumer is going away from brand names and trying to shop for the grocery store name that could be actually a lower price, but maybe the same quality. So I think the big thing from a food company standpoint is what's going to be my margin. I'm not worried about wheat prices. I'm not worried about flour. But number one, I'm worried about my cost and my demand.
Steve Freed with Freed Consulting in Chicago. Thanks for being here at the purchasing seminar and giving us a little bit of your time afterward.